What's up, investors? Today I'm going to give you 5 stocks that I like to buy whenever the price starts to dip. Here we go. Number 5, Nike. Now I know that Nike is not immune, like any retailer out there, to the current virus situation that we have going on right now. So they're closing stores, sports aren't being played, marketing and all that thing is being affected by this. But guess who it also affects? Nike's competitors. Have you taken a look at Under Armour recently? This stock has been on a straight line down. They talked about cutting marketing spend, cutting all kinds of expenses over at Under Armour. I think that's going to slow their growth and help a company like Nike just capture more market share than it already has. So I love Nike. Now, I think it's a little expensive at today's price. I'd like to see it drop down maybe below $80 a share, maybe in that $70 range. I'd love to get it back into the $60s and $50 range. I don't know if we'll see that kind of decline in it, but I'd love to buy more shares of Nike. Stock number 4 that I like to buy whenever it dips is Walmart. Now, another retailer. However, if you look at a stock chart of Walmart, we've had recessions back in 2008, 2009. We had September 11th. We had the dot-com bubble burst back in the early 2000s. But you look at a stock chart of Walmart, it almost seems immune to all of that. And that's because they have a very clear value proposition to their customers. They cater to low price. They deal with grocery. And a couple things that Walmart has done in the last couple years that has really helped in the situation that we're in now. They've really invested in curbside delivery. So you order online and then pick up in your car at the store. And they have hundreds, thousands of stores around the world where you can do this. So they are very well equipped to handle the current situation we're in. And again, if you look at the stock chart of Walmart, it has been on a steady rise for a very long period of time. So I like to buy it whenever it dips in price. Stock number 3. Now I kind of cheated here a little bit. I've got 3 stocks here, but they all play in the same sector. So I've got Visa, MasterCard, and PayPal. Look, again, the situation that we're going in, I've gone to stores and they don't want to take cash. They don't want anything to do with cash. And I think that's going to be a trend going forward as well. We've also seen lots more spending because you can't go outside. You can't shop at stores. We've seen lots more shopping and spend shifting to online. Sites like Amazon, Walmart, eBay, any kind of online e-commerce site. And guess how you have to pay when you pay on those sites? Obviously with a Visa, a MasterCard. You could probably throw American Express in here as well, but also PayPal. Now, here's what I would advise you to do. I would try to go equal weight on all of these. None of these stocks from a price to book or a price to earnings basis are gonna look particularly cheap when compared to maybe the rest of the market or maybe even traditional financial instruments. But again, we're waiting until these stocks pull back a little bit to acquire some shares. And what I would do is exactly what I've done. I've gone equal weight about Visa, MasterCard, PayPal, and American Express. I've kind of spread my investment across all these so I can kind of capture the entire world of financial payments, e-commerce payments, and kind of the future of how I think more and more people are going to pay for things. Stock number 2, again, I cheated a little bit here, but it depends on your personal portfolio. So if you're a little bit overexposed to Apple, which a lot of people might have been if you've held the stock for a long period of time, or maybe you're a little bit more exposed to Microsoft, I'd like to see you start getting equal weight, maybe both these companies. Now, they play in different sectors, okay? Apple is obviously more of a hardware company and they have phones and computers, and Microsoft, while they have a little bit of hardware, especially if you count the Xbox and things like that, and the Surface tablets that they sell, they're more involved in software and kind of the services side. But I really like both companies. And so if you're like me, I've had Apple shares for a long period of time. They've appreciated quite a bit, almost doubled, maybe even tripled in value since I've bought them. And so what that's done is now I'm kind of overweight Apple. And unfortunately, I've kind of missed the train on Microsoft, and I'd like to buy some more shares. Again, we're waiting for a pullback in these shares. These companies aren't going to sell off rapidly. I'll post links in the the description below where I've gone over these companies' balance sheets and their earnings. These are exceptional companies, and so don't expect these to come back huge amounts of money, but when they do, I love picking up a couple shares. The number one stock I love to buy on any kind of pullback in price, and it often happens if you follow this stock, the price does come down and you do have chances to get it at a more affordable price, is Amazon. I love Amazon. It is the number one e-commerce site in the United States. I don't see that changing for the foreseeable future because they have invested so much in their infrastructure and their fulfillment capacity and their delivery capacity that they are far and away above everybody else, and they continue to reinvest in these areas. On top of that, you have the AWS cloud computing business, which is also a market leader here in the United States and really globally. And while Microsoft and Google have comparable products, and maybe there's some other products out there as well, Amazon is always going to capture a considerable amount of market share in that business as well, and it is highly profitable. I love Amazon because they have a massive moat around their business. Once you're in the Amazon Prime ecosystem, it is hard to move on to other sites. Now, they've had some struggles here with the virus. If you've tried to order on Amazon recently, the delivery times have been extended. My guess is that is going to slowly start to correct itself, and Amazon is going to again turn into the site where you can click a button and buy something and it shows up on your front porch either later that day or the very next day, and that's for almost every single item you buy on the site. I can't think of another retailer that is anywhere close to promising that from coast to coast here in the United States, and Amazon is pretty much already there. So I love buying Amazon. The only problem is the shares are pretty expensive. So if you have an account where you can buy fractional shares, that's a great thing, or you're just gonna have to save up your pennies and fork over $2,000 a share at this point for some Amazon. But I'd wait for a little bit of a pullback and I'd love to buy some more. Hopefully you guys enjoyed this video. I'll be back again this week. Hit me a comment if you have any video suggestions. Hit that subscribe button if you like what we're doing here. Hit that like button too. We'll see you guys later.